I mean, we're starting to run out of steam. I mean, we're kind of potentially coming into a big reset here.
My logic didn't hold a month and a half ago because I just lost a, 40 to 50% rally. So why not go in now? I don't want to miss out on another 50% rally if it goes up to, let's say, $130 an ounce.
Yeah.
Right? We don't know, but I've already missed out once. I don't want to miss out again.
Like a lot of people have been picking a stock market top. I've been thinking the market's been topping for years, but we still ride it higher.
It's Monday, January 19th. Markets are not open in the U.S., but let's take a look at what may happen this week when it does. Chris Vermeulen, Chief Market Strategist at thetechnicaltraders.com, joins us once more. And we're looking at an S&P 500 that's barely moved from all-time highs. Gold is above $4,600. Silver is now almost at $100. That is insane. Bitcoin is at $94,000, $93,000 now, down about 2% on the day. Perhaps a leading indicator for what's to come for stocks. We'll find out. Chris, welcome back to the show. Good to see you again.
Hey, thanks for having me, David. Always a pleasure.
Martin Luther King Day. Happy Martin Luther King Day for the American audiences. And thank you for joining us today, Chris, on the non-trading day. But let's take a look at what's happening in the news right now. Trump has threatened tariffs on European countries that have supported Greenland. I think there's about 10 of them. And now in return, those European countries are threatening retaliatory tariffs on the United States. So it looks like we have now an escalation of the trade war, starting with what Trump says is Greenland, a national security priority. Yes, also a National Geographic priority. They've done a lot of filming there, but a national security priority. And now it looks like trade wars are heating up. It looks like it's going to be a down day tomorrow if indeed this news doesn't go away. But news aside, how are you reading the charts?
Yeah, I mean, I think the equities markets are closed today in the States. And if we actually, look at what's going on, because there's a very low volume today, it's really just the futures markets opened. The rest of the world can't really queue in or American traders, the equities markets. So if we look at the equities market, we're seeing a big drop today in price. We're seeing the NASDAQ down about 1.2%, the S&P 500 down about 1%. Now, there's a couple ways to look at this. Overall, usually gaps on the S&P 500 and the NASDAQ get bought up, meaning if the price gaps sharply lower or sharply higher with a void in between from the previous day, we tend to see those gaps get filled. Now, if we look at this 30-minute chart, we can see over the past couple of weeks, we've seen the market dip into these lime green territories. And these are considered just short-term oversold market conditions. It means it moved down too quickly. It's still in an uptrend, and bargain hunters step in, and the market usually bounces. And so today we're seeing another big gap down on news, and we're seeing it becoming oversold. And then if we look at the daily chart, we're actually seeing the market gap down and test the blue moving average. This is the 50-day moving average. And generally, when we've hit the 50-day moving average, we can go back in time. It's usually anywhere close to it. We tend to find support. And to add to that, we're also seeing the volatility index spike up today. Finally, we're seeing a significant spike. It has been drifting higher for the last several weeks, but no real spike in fear. And today we're seeing finally a big move up, a surge in fear. And that usually can also signal a bottom. The basic saying is when the VIX is high, it's time to buy, meaning if the VIX is high, there's a lot of fear. People have just sold stuff. You should be buying equities because it's oversold. So that's what we're going to see. Tomorrow, the markets are likely to gap lower, potentially even lower from today. And I think we could see bargain hunters step back in and buy things back up. So again, it's a news-driven move. You can't really trust news-driven moves. And same with price gaps. The gap in prices should rebound. So that's what I'm expecting to happen probably Tuesday and Wednesday as the market stabilizes and recovers from this little news-driven bout of selling.
How much lower does this gap have to go before you see it as a buying opportunity?
Well, I don't so much buy dips. I mean, we're long the equities market, so we just let it kind of work itself out. Overall, I mean, if you were a short-term trader, technically, like here's the NASDAQ, it's oversold. This is technically a short-term buying opportunity. You buy into these dips and then you can sell into the rips, the big bounces and sharp moves that happen. That's a very short-term strategy, but that's where we are right now is I'd buy into this gap if I was a short-term trader potentially on Tuesday and let it see how it recovers.
Okay. Do you think that there's probably going to be a rotation away from equities into something else in 2026? 2025 was a great year for equities. Bitcoin lagged behind somewhat. Tremendous year for the metals, precious metals in particular, and the white metals, so palladium and platinum alike, and also mining stocks associated with those metals. But besides that, it looks like 2025 has been a great year. 2026 has been a pretty good 2 weeks so far, 3 weeks so far for the stock markets. But I noticed this the other day with another guest of mine, that the Russell 2000 has been starting to outperform the S&P 500 in the last 6 months. Perhaps we're seeing a rotation away from large caps into small caps, or just away from stocks altogether. What do you see?
Yeah, well, we're definitely seeing that. We're seeing small caps and micro caps really start to lead the way and push higher. Now, you can see this in two ways. I still don't feel like this is a broad market rally. I love it when small and micro caps lead the way and move higher, but I also want to see the broad market, most sectors pushing higher, hitting all-time highs, but they're far from it. So there's no doubt people are getting risk on, they're moving into this space, and a lot of people will look at that as a bullish sign. I actually see that a little bit as a bearish sign. And a good example is if we drop to the weekly chart of the Russell 2000, and this goes back, you can see we had the COVID crash, then we had the recovery, and then more or less right here, we saw one big push. Everyone piled into small caps and micro caps, thinking it was the start of something big, and then we went into a bear market for a year. For equities across the board. And so I feel like we're actually in kind of one of these pushes right here, where this big push up in the juniors, the micro and small caps, is actually kind of that last little push of people getting overly aggressive, overly excited. And I think it could reverse very quickly. And gold and silver and the rally in the precious metal space is definitely a big warning sign that we're starting to something I think big is brewing. Obviously, you rhymed off, David, a whole bunch of things that we're seeing with Trump and tariff wars and potential country takeovers, all of that stuff. So I think there's a lot unfolding in 2026. It's going to be hard, I think, to find something that potentially moves higher and is higher from where it is right now at the end of the year. I think metals are probably going to be lower than where they are. I think stocks are going to be sharply lower. The bond market is still trying to carve out a bottom. So I'm not sold on this being the start of something big and exciting for equities. I think it's actually telling us we're getting closer and closer, like weeks potentially from a major market top. And I think we're also potentially just a couple weeks potentially from a precious metals top, in terms of everything is going ballistic. Just like the small caps and the micro caps, we're seeing everyone pile into the silver space. I saw lots of people giving silver away for Christmas who aren't in the space. Costco's sold out. The post office and all the places here in Canada where I'm at, they're all sold out of silver. Everybody wants it. And that is like the feeding frenzy. If it's just those, I usually that's when the market tops, right? Is when everybody else is moving in and they feel like they need to get in and is just starting. I think it's actually more so that this whole space is just coming to an end, and we're going to go through a cycle. So to answer your question, I don't know what's going to be higher at the end of the year. I think the dollar could actually hold its value, because I think we could see a lot of other currencies. I think we see a lot of other commodities and equities markets sell off as well. And just to add to that, people, we're seeing a little bit of fear in the market. A lot of people don't know what to do, because the equities market has been trying to move higher for a little bit. And if we just go back to the daily chart and look at the real estate space, we've seen real estate over the past few days really pick up speed. I always notice this just before we see a major turning point in the market. Real estate generally comes to life a little bit because people don't know what to do, but they believe in real estate. So they're like, I don't know, I'm just going to buy a real estate ETF, a REIT. And so I'm interested to see how this week is going to fold out, or the next couple of weeks, really. It's going to be volatile for stocks and precious metals across the board.
Before we continue with the video, let's talk about today's sponsor, Delete Me. Most New Year's resolutions fail because they require constant effort, but protecting your online privacy doesn't have to. Your personal information, like your name, address, and phone number, is often collected and sold by data broker sites. That's why I use Delete Me, a service that helps reduce that exposure. It takes about 5 minutes to set up, and then they handle the work for you all year. They scan for where your information appears and submit removal requests to hundreds of broker sites. I've been using it for more than a year now, and they have reviewed over 325 listings to see if any data brokers have my personal information, and they continue to check to make sure it stays off. Go to joindeleteme.com/DavidLin, link down below, or scan the QR code here and use DavidLin, that's my promo code, at checkout to get 20% off all consumer plans. Take control of your online privacy today before somebody else does. Now back to the video. The metals markets we'll come back to in just a minute because it's just an absolute rocket ship right now, especially silver. So Chris, do you ever trade on, let's say, thematic issues? Let's say you look at 2026 and suppose trade wars are heating up, or suppose there's a risk of sovereignty, the issue of sovereignty at risk for many countries around the world. And do you let those issues kind of take precedence over the charts at any certain point in given point in time?
Never. No, I don't. I really follow price. Price usually leads. Usually price leads the news, and sometimes there's surprise news, but you can't predict what's going to happen. You can't count on countries collapsing. People have been expecting countries in the United States and the dollar to collapse for decades, and you don't want to bet against it. So all I focus on is pure technicals. I don't care what the news is. I don't care what people think or feel. Just follow price, and it tends to be the leading indicator. Usually price moves first, and then news events start to unfold. Cycles start to unfold in the economy after the equity. So that it really keeps things simple than getting caught up in all the news and all the possibilities. Because as soon as you start thinking, well, this could happen, that could happen, and fear is very powerful. It creates a lot of emotion. It creates a lot of emotionally driven trades and decisions that really go against, like a lot of people have been picking a stock market top. I've been thinking the market's been topping for years, but we still ride it higher. But I don't get into the news and the fear, because if I was to get into that side, I would probably be out of the market, and I'd probably be like buying inverse ETFs. But if you just keep it focused on price, you're like, you know what, it's still trending higher. I believe it's going to top at some point, and it will have a huge correction. But until then, you just got to stick with it, follow the price. There's always bad news, and the news always seems to be getting worse and worse and more extreme, but it doesn't mean you have to, you trade around it.
What I've noticed is that the last 3 months since October, the S&P has been grinding higher, but the slope of change has been lower, meaning it's been grinding higher at a slower rate, meaning the slope is more flat than before. Up until that point, especially since Liberation Day, April 2025, it's been going up much faster than the last 3 months. And even before then, if you just go back to 2024, 2023 even, it's been a steady slope upwards. It looks like this slope is flattening. What does that tell you?
Yeah, I mean, we're starting to run out of steam. I mean, we're kind of potentially coming into a big reset here. And just like we saw earlier this year in 20 with the tariff kind of crash, it's losing that momentum. And you can definitely see, if you look over here, the market had some big pullbacks. It traded sideways. It made some nominal new little highs, and then it fell off a cliff. Well, it's had a sharp pullback. It's made some nominal new highs. It definitely has lost that momentum, that move to the upside. And I think a big part of this is just look at the Magnificent 7 ETF. It's been trading sideways. In fact, it looks pretty bearish. I mean, it's just not looking very healthy. And this is really the main driver of the indices, at least of the S&P 500 and the NASDAQ. It's not looking very healthy. So it's definitely lost its shimmer, its shine. Bitcoin lost its shine a long time ago. Now the Magnificent 7. So all the things that were super popular and everybody wanted, now people are like, they're not interested. And they're getting bored of this sideways price action. So they're starting to just move aside. And now they're moving into other things that are moving, that have more opportunity, which is precious metals at this point.
Can you give us some short-term levels to watch for the S&P 500 before we move on to the metals?
Sure. Yeah. If we take a look at the S&P 500, some short-term levels, we could look at it a few different ways. Now, there's not a whole lot of upside potential based on this last sharp reset that we saw back in October, November. But based on that low and this initial reaction high and this standout reversal bar, and we come down to this low, that'll give us an idea of where price should head next. Now, it's not a whole lot of upside from where it is right now. It's about, as of today, you and I are speaking, it's about 4.5% to the upside. So that's 7,225 right in that area. And the Nasdaq is about the same potentially, but if the Magnificent Seven don't participate, then it might be a little more dulled. We actually might see the S&P 500 outperform the Nasdaq. And if that's the case on this, if we do get one more push higher, then that's another warning sign, a red flag that okay, the Magnificent Seven are dead. And when they actually do roll over and start to break down, and everyone starts to dump, we're going to see a very big correction. I think we're going to go into something pretty ugly once that unfolds. But that's the upside potential on the S&P 500. Now, if the market was to roll over right here from the news, we can do from the same pivot low a Fibonacci retracement, meaning all the way up to the highest high that it's made so far, and carry that forward. The sweet spot for this is right in this box here between the pink and the purple line. That's the 50% retracement. So it pulls back 50% of the rally or 38%. So there's a little bit of downside still where this could pull back about 1 to about 2% before it could find some support and then try to maybe put in another bounce. So the key here is the underlying trends are still up, right? You got the long term, the 150-day moving average sloping up, prices above it. All the moving averages are pretty much sloping upward and layered nicely. That's still a bullish sign. So dips and pullbacks are usually just that. They're a dip and a pullback, temporary, before it resolves to the upside. But there's no doubt we are, I think, very close to a very significant correction in equities and a blow-off peak in metals that will also put in a major top in the next few weeks or potentially a couple of months.
Okay, let's take a look at this blow-off peak in metals. First of all, why do you say there's going to be a blow-off peak in metals? It doesn't look like this momentum in the metals has stalled, at least not to the same extent that it has for stocks. And right now we're looking at, like I mentioned in the introduction, $95 almost an ounce for silver. And I was talking to you offline about this. I was joking that time flies too quickly, literally, for silver. It's only been about 3 months since it basically doubled from $45, $50. And I've been doing interviews since 2020. And I remember just, not even 2020, but just like last year, when people were on my show giving these triple-digit silver forecasts. I could see in the comments, I would tell guests, look, I could smell these comments from a mile away. People are going to say, I've been waiting for this for 40 years. I've been hearing this for 3 decades. Like, this is not a new prediction for me. Like, let's talk about something new. And then here we are, all of a sudden, overnight, we're getting $95.
Yeah.
So it looks like $100 is almost a certainty by now. And it looks like all these quote-unquote crazy people, according to the comments, that called for triple-digit silver turned out to be correct.
Yeah.
I'll just stop here, but certainly a remarkable time for the metals.
Yeah, I mean, you make a good point. I mean, three digits, triple digits for silver seemed pretty crazy, 4 or 5 months ago. And here we are, probably going to blast through the $100 mark for silver. And here's the thing, you made a good comment there. You said, people waited 40 years for silver to finally break through here. And then suddenly it has this in 3 months, it just goes absolutely ballistic and goes straight up and hits those levels. I mean, it took 40 years for it to build a base and work itself out and get here. It's not like, yes, it unfolded very quickly, but overall, the speed that it happened, I think, is going to catch a lot of people off guard. So because in 3 months, people have gone from, I've had 30 and under dollar silver forever. And, in 3 months, it's now worth triple that. It happened so quick. People think now that the silver run and the precious metals move here is just beginning. I actually see it the opposite. I think we're actually going to see a continued blow-off move to the upside in pretty much all metals. But I do believe time-wise, we are very close to a significant standout high. And I mentioned this earlier. Everyone seems to be moving in. Whoever's open to buying precious metals, that's the everyone, is buying it now. Who have always thought about it and wondered about it, they're now starting to go to the general stores, the retail traders, and buying. Retail individuals are buying it. And so the fact that it's moved so quick, so fast feels great. There's no doubt about it. I'm heavyweight in silver over gold myself. But just because it's happened quick doesn't mean it's the beginning. It doesn't mean silver is going to run for another 10 years. I think it's quite the opposite. And the market usually tops out when people least expect it. Just as everybody gets excited, the music stops, right? It's like fluorescent lights go on, cops pull up, party's over. It's like, that's where I feel like we're heading. And it's been very similar to, we'll just flip back quickly to GDX, for example. GDX, we go way back to the miner space. I mean, I think a lot of people can relate to this. People got into miners in this whole move up leading into 2011, 2012, and they had to put in a very, very long, painful thing. And really, the reality is we've only seen like, a very quick move up to new all-time highs in the miners. And again, people still think it's just the beginning of a very long cycle, but I believe, we're actually coming more into a bit of a peak. So let's flip back to silver because I have a $106 per ounce target on silver, which I think we are going to hit probably from the momentum in place, really, maybe even this week. So if we were to just take a look at this last big consolidation in silver, we take the low, we move up to this standout reversal, this pivot high, and we come back down to this low, it's going to give us our two levels that we always follow, or that I always follow. Those two levels are the 618. That's the 61% extension. It's called the golden ratio, the Fibonacci golden ratio. If you move to that level and price has a little bit of a hiccup, which it has, we almost always go up and see price hit the one level, which is a 100% measured move. And so that is at the 106. So that is what I'm expecting to hit most likely this week, just based on the daily chart and the pattern here. And after that, we could see a couple of things. We could see price go ballistic and actually have a little bit more. I say a little bit more. It could have another big blow off phase. It could go up to 120, 130. Huge green bars. It absolutely gets everybody into like this feeding frenzy. But then it could have a very, very sharp reversal and actually put in a peak. Right when people think it's just getting going, it could be coming to an end temporarily. And we've seen this before. Like, for example, we did a trade in silver, just a short-term extra trade. We got into silver. I can't remember exactly where it was, somewhere right in here. And we sold out right here, I think. And we also did this for similar to gold. We caught the easy move. And then once you hit that Fibonacci 100% measured move, it goes into a volatile feeding frenzy. It's unstable. You don't know if it's going to just get hammered or if it's going to spike up and chop around. And of course, we've had another long trade in the precious metal space. We're long again. But that's what I'm expecting is we're going to probably see gold and silver hit their 100% measured moves very quickly here in the next week or two. And then we could see a big blow off phase. It could go even higher. Silver have a big spike, gold. But if we do get that big spike from those levels, that to me is going to be the trigger like, hey, I might actually be looking to actually sell and trim off some of my physical metals. Because when we get into one of these scenarios, usually we get into a very, very sharp correction. And silver is a pretty scary looking chart in terms of that. What goes straight up, likes to come straight back down for at least half of that move. And so if I clear the chart, we could see silver spike up into the triple digits, and then it could easily come back down into the 60s, 50s, or even the $45 range very quickly. Now, people don't want to hear that. I'm going to take it on the chin for that, but that's what I think is going to happen. And because everybody's going to jump on me for saying, silver's about to put in a big blow off peak and probably have a sharp knee-jerk reaction, that is also a signal that most likely it's going to happen. And that's what we see whenever things get like this. Man, you can't say anything bad about the space or you get torn to shreds. And that's just the way it is.
Shreds. Who's tearing you to shreds now?
Comments tear you to shreds.
Okay, well, comments aside, Chris, let's look at the downside risks of such a move. And I think traders and investors alike, or even just metals enthusiasts, would like to know what indicators somebody like you, a professional trader, would look at to gauge when something is becoming overcrowded. In other words, you're looking at $106, $120 an ounce, perhaps on the upside as a target. But at what point between now and $120 should you start to get really, really worried? How do you know?
Yeah, I think we'll see. We're already starting to see some of those signs. It really comes down to a chunk of it is sentiment. What are other asset classes doing? Like are stocks going down, and are other people selling other assets to move into silver and gold? Do we start to see record volume spiking in futures, in the silver ETFs, in the leveraged ETFs? And I actually talked about this with subscribers the other day. I was showing the difference. And if you look at the leveraged ETFs on like gold or silver or the inverse ETFs, when they start to spike in volume, it's usually a very, very good signal that that commodity is about to put in a major top, because people generally move to the leveraged plays, and a lot of times they they do it right, literally 2 or 3 days just before it peaks. So it's not that I use it to trade. It's definitely something that I watch. I'm like, holy crap, here we go. It's like the masses are now putting on, call options. They're buying leveraged ETFs at massive scale, like huge volume spikes. That is a huge red flag. When everybody's putting leverage in after a ridiculously big rally and prices is gapping higher and running up, you got to be aware. I mean, if you go back and look at this silver chart, if I just go back to this previous one, look at these monthly candles. You get a gap up and then it runs higher. You get another gap up and then it runs higher. We're starting to kind of get that. We're really starting to pick up speed. And I think if we start to get another big blow off phase, it comes down to bubbles are very tough because when something is going parabolic like this, it comes to momentum. You got to look at the short-term charts. You got to look at the volume, the sentiment. As I just mentioned, ways to do that is with the leveraged ETFs. You kind of have to be happy with a certain level and say, you know what, this is super frothy. The signs are it's going to put in a top any point. I'm going to start selling and trimming off my position. If you want to wait for a bubble to top, the problem with that is you're going to have to go through one of these. You're going to have to ride down one red bar that gives back probably half or more of your recent gains. And so bubbles, you kind of got to ease out, trim as things keep going higher and higher. Be happy with the profits and be like, I'm protecting my capital. I'm locking in gains. I don't care if people make a bit more than me. I want to protect it. I want to be smart about this. That's how I go about it. I'm not in it for the roller coaster ride. I'm in it to protect my capital, lock it in. If it goes higher without me, I'll buy it back later after it's had a multi-month or multi-year pause, and I'll buy it again later when it's ready for another 100 or 200% rally. So I don't get caught up in missing out. I don't get the FOMO with the markets. I've done it long enough. I've watched enough people blow up their accounts that FOMO doesn't bother me when it comes to precious metals or a penny stock that I love. I just let it do what it's going to do. I can buy it back when it's primed and ready for another leg higher. And if I have to pay a higher price for it later, that's fine.
Let's remove the silver ticker and just leave that chart up there. My point is, let's say we don't know what that chart is. It doesn't matter. We're just analyzing technical movement purely from a technical perspective. And so you're looking at this giant green bar. It's not even just one green bar. It's a series of vertical green bars. And at any point in the last month and a half, you could have made the argument, well, it's already gone up parabolic. I don't want to get in. It's a crowded trade, and the risk reward ratio is just not in my favor right now if I hadn't gotten in already, and so I'm going to stay out. And you would have missed another 50% rally. And so now I'm thinking, well, my logic didn't hold a month and a half ago because I just lost a 40 to 50% rally. So why not go in now? I don't want to miss out on another 50% rally if it goes up to, let's say, $130 an ounce.
Yeah.
Right? We don't know, but I've already missed out once. I don't want to miss out again. Help us evaluate that logic.
It really comes down to your personality and how you want to feel about it. I mean, the way you word it, you're like, I just lost 50%. Well, you weren't in it, so you didn't actually lose 50. There's a mindset shift.
Yeah.
People find it more painful to watch gains happen without them than they do when they take a loss, for God's sakes.
Yeah, that's been proven by studies. You're right.
So you got to be able to overcome that. If you have FOMO and this thing's ripped up, you're like, I didn't buy it at 60 or I didn't buy it at 50 and now it's at 100. I lost money. It's a terrible mindset. You can't look at the markets that way, or you're always going to feel in pain and you're always going to be upset and you're always going to be chasing things. So if I scale out of positions. Now, I know enough about the markets that I know there's going to be a very big peak here at some point. I don't see the final signs just yet. I believe we're very, very close for me to start trimming off and selling some of my metals positions. But for the average trader, as you were just saying, like somebody who's watching it go up and they want to get in right now, honestly, the best thing to do, especially looking at this chart, it doesn't matter if it's silver or not, something that's gone straight up like this, you got to just wait for it to have a pullback or pause. It's got to build a new launch pad. You got to let some of this momentum burn off through sideways time on the chart or through a pullback, and then you could re-attack it. But jumping in here, at 94, sure, you might catch a move up to 130 or 120 if it spikes. But if you're that type of person who got in here with that mindset, you're also not going to sell it when it hits 120. So you're going to ride it down anyway. So it really just comes down to you have to have a game plan. You have to not be trading based on how much am I missing and other people making without me. It's got to be like, how can I navigate this with my position and have a stable mindset of how you're going to attack it. And it really just comes down to that. Unfortunately, most people just look at the markets through the wrong lens. They let their emotions kind of take over, and it gets them on the wrong side simply because of that.
So once this feeding frenzy is over, in your words, how do we know how far it's going to drop? How do you make that analysis? Just looking at this particular chart as an example.
Yeah. So, I mean, the best way to do it, I'm just going to draw a line at 106 because I think we're going to go up and hit this 106. So I'll pick that as the peak. So one of the best ways to go about this is just to use a Fibonacci retracement, meaning it's going to tell us on average, the momentum, how the mindset works, the universe works, is going to tell us where price should go. So we could take a couple different levels. This is a fairly significant standout low before it ramped up. So we go from this low, and this is going to go all the way up to the peak of 106. And so it's saying that silver should or could, the most, a healthy pullback would be into this range. So that's $62 to $72 an ounce. If it pulls back deeper than that, it starts to do some damage to the chart, and it actually starts to put in significant overhead resistance. I won't get into that. But long story short, that is the sweet spot that if it pulls back into there and starts to stabilize and then starts to move higher, that could be a point you could get back in, because after that, it could go a whole lot higher. And just based on the same move going up to the high, and this is using Fibonacci extension, and say it pulls all the way down to the 50% mark. Now we can carry that forward. So where's the next move after that? As it starts to find support and starts to move higher, you could move in. It should go to 117 and then 151. But you don't have to suffer this, buy here, ride it up, and then watch it crash 20, 30%, and then put in all this time for it to rebuild again. You could just, I think the best thing to do here is to let it see what it does at 106, and if it blows off and reverses. But this is the sweet spot. If we, that's where it should find support if it settles back down into that space.
Okay. Is there anything that you think is not in a feeding frenzy right now? Any assets or securities?
Well, yeah, I mean, there's no way equities are in a feeding frenzy anymore. Let me just flip back to the daily chart. So the stock market's just chugging along. It's struggling. It's losing momentum. The only spot in there, I mean, we can look at the hot list. Obviously, anything in the metal space has been doing very well. So we've got like silver miners have been on fire. The base metal mining ETFs have been moving up. If it will load here. Pretty much the commodity-driven stuff. We got COPEX, so copper miners, uranium stocks, gold miners. What is this? The aerospace, defense space has been doing obviously pretty well. There's a lot of stuff going on around the world, so defense has kind of picked up speed. Sure. I wouldn't say it's a feeding frenzy in other spaces. Like the equities market is struggling. Precious metals really has all the shine. It really does. And of course, stocks related to it, commodity-based stocks. Okay.
All right. Finally, let's finish off on Bitcoin. We've got a few minutes left. Bitcoin at $93,000, trending sideways for quite some time, and just kind of, and I can tell you from personal experience talking to people in the space and talking to other YouTubers and creators alike, it just feels like sentiment right now is non-existent in the sense that there's just so much apathy. It's not like people are very bearish, because clearly there isn't like a tremendous amount of selling. It's just that people have moved away in terms of interest away from cryptos and Bitcoin for now, and are focused on other things, perhaps the metals, perhaps other things. But retail sentiment, totally apathetic right now.
Yeah, for sure. You brought this up a long time ago. A lot of people in the Bitcoin space a lot of gold bugs moved over to crypto in Bitcoin, right? And so if that's the case, if they all moved over to Bitcoin while gold was dormant and all that stuff for many years, obviously that space, those people are like, you know what, Bitcoin feels kind of dull. Let's move back to the precious metal space. So I feel like a lot of the energy in the crypto space has completely left. And you're right, it just feels very lethargic. Doesn't feel like there's energy, excitement in this space anymore. I mean, we have these kind of standout lows. We got these cycle lows that are happening. Bitcoin is still making a series of higher highs. So it's long term, it's still in an uptrend. But the shorter term chart definitely doesn't look so good. It is pointing to another leg down, a fairly big leg. It'll probably bring us down into $60,000 per Bitcoin based on this bear flag. And today you mentioned Bitcoin's down about 2.5% or so. And well, the equities market's down, right? I think there's a pretty big correlation that if money's flowing out of equities, a lot of times we see money flowing out of, especially the Nasdaq. We tend to see it move out of Bitcoin, and so that's kind of the same play going on. And the fact that the stock market has been, moving higher and Bitcoin has been moving down is not a good sign. What happens when the stock market does have a 20 or 30% correction? Bitcoin is probably going to get hit very, very hard and unwind very quickly. So I feel like it has lost its shine. It's just drifting around, and all the attention is really in the precious metal space right now.
Okay. Any levels you can assign for Bitcoin short term?
Yeah, so we could look at a couple quick levels here. We could do a Fibonacci extension to the downside. So based on this big leg down and then this bear flag pattern at this point, it's pointing to a fairly precipitous fall. So if we look at this chart, it is saying from where we are right now, we could see it fall to the 618, which is a 24% haircut, all the way down to about 51,000 per Bitcoin, which would wipe out some very, very significant lows. This low right over here. Once this is broken, there is going to be a flood of people saying, okay, it's gone from a long-term uptrend to now it's actually starting a massive bear market and a long-term downtrend. And of course, it could break this low, right? These lows right over here, and potentially this little spike low. If it breaks that one as well, it'll probably create some flush out low, some huge wave of selling, and then probably put in a very strong bottom. So it'll be an opportunity if it gets down there. Obviously, that's a long ways away, but that's what this chart is pointing to on a short-term basis. On the upside, if we were to look at it from a bullish perspective, we could potentially see it drift up a little bit higher. We can use a Fibonacci extension. Now it's a much weaker chart pattern. We just have this little leg here. It's saying that we could see it rally up, pull back. It's hit the 618, it's pulling back. So it might go up to about it says 999 here, could go up to about 100,000, which is very clearly this resistance area. And last time it found 100,000, it bounced and then it broke below it. So the 100,000, as you and I have mentioned before, it's a psychological number. It's a whole number. People naturally, when you're underneath 100,000, will say, I'm going to sell my Bitcoin if it gets back to 100K. I'm going to get out. If you're above it, generally, if it dips to 100K, people are like, I'm going to buy some when it hits 100. So these psychological levels, David, are like very critical for Bitcoin because it was a level that was yelled out forever. And so it is the line in the sand. We might see Bitcoin drift a little bit higher. Just break that 100K a little bit, get headline news, Bitcoin back over 100K. It's, back in gear, but it's probably going to be resistance based on what I'm thinking. And then we see it continue this bear flag pattern. It rolls over and sells off. So that's kind of the two angles I see at Bitcoin. Short term, it's still working its way up, but overall, the bigger picture is pointing down.
Okay, perfect. Let's close it off here. If you have any questions for Chris, feel free to reach out. I'll put his X handle down below, and also the website where you can find his work. Where can we find you, Chris?
Yeah, if you go to my website, thetechnicaltraders.com, which you've got a link actually below in the video there, and anybody who signs up through your link, David, I'll send them some gold as a subscriber. So anyways, that's where they can go. I really manage the markets. I manage my own position. And members and subscribers there copy what I do. We all trade the markets together. I don't just dish out trades. I only give out positions and trades that I take. And we have 5 to 12 ETF trades a year, and we rotate through various assets to make sure we're only holding things going up in value or on the sidelines safely protecting our capital.
Okay, excellent. Thank you very much, Chris. We'll speak again soon.
Thanks, David.
We'll follow up in a couple of weeks, see what happens with these markets, to see if these feeding frenzies you talked about have been satiated. All right, thank you for watching. Don't forget to like, subscribe, follow Chris. Links down below.